Good morning, everyone. Welcome to our Thursday morning trading room. One moment here while I get the screen share going on. Okay. All right, a little bit of a roller coaster going on yesterday with the market bouncing up and down a bit, but overall, it seems like it was a little bit more bullish than bearish, at least going into the close and through the overnight. You can see the market leaving off here at around 6,005 and then opening up here around the 60-30 area, 60-25, 60-30. So we do have a little bit of a gap just below the market. We're just about to move into scalp mode, so we'll see what kind of follow through we get here. For those of you new in the trading room, what we're looking at here are the NASDAQ charts. I've got my Hawk Scalper here on the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and then the Raptor on the bottom right. I'm also watching the Euro dollar and crude oil on my other monitor. But please don't be shy about asking questions or requesting a market if you like. So we're just a couple minutes in here. We'll let the market kind of settle in. See if we can't discern which way they're more likely to go here this morning. Whether it's going to be another bullish day, or I suspect, this is just a gut call, but that we might see the market fall off today, maybe. All right, so after a quick run up, the Raptor giving us a very, very tiny test of the extreme so far. And what we might anticipate from here now is a number 2 signal. That's our sell signal. It might develop quickly, so you may just need to get ready here on your sell button. Stops will go above the high. And of course, this is a counter trend signal, so it's going to be a lot riskier. I would suggest you just go in with a single contract if you're going to try this. See if anything else is teeing up. Okay, the Falcon actually producing an early trend change signal already, so you could get on board on the Falcon. See here if the Raptor gives us one. There it is. All right, so what I'm going to do is I'm going to extend my profit objective here a little ways, as well as my break even. So you see how you can anticipate these signals once you know what you're looking for, how the signals are formed. You can learn to expect them, anticipate them. So whenever you see a market struggle to regain the highs after a pullback, you can anticipate a number 2 signal will form. Now, if I wanted to be really aggressive, well, here, why don't we swing for the fences today? We'll take it all the way down here to the median line. And I'll take my break even here about halfway to my profit objective. Sorry about that. Yes, I was having trouble with my microphone. Every once in a while, I don't know, however it works, whether it's the Bluetooth or whatever's controlling the wireless, it doggone it, I don't want to roll this stop yet. Stay up here. All that, I really wasn't talking a whole lot. All that I mentioned was that the strength here, the number 7 on the swing high-low strategy, I just increased that. And what that means is that there's going to need to be 7 bars going into the turn. That's how the trade manager is going to gauge the swing. Floyd says crude is on the move. And so it is. Bear with me a moment here. So crude oil making a little bit of a rally off of this number 2 signal. So we got the earlier number 2 here. Once again, you can see the market attempting to head lower, breach this high. So that's an indication that maybe, in fact, the prices, the number 2 signal was going to have a little more follow through, which it did. So for those of you following crude oil, nice little rally there. Way to take one for the team here. Steve says, I didn't take the short, but if I did, I'm sure it would have reversed and stopped me out. Way to go, Steve. Thanks. Thanks for not taking the trade. I'm joking, of course. You know, it's, and I'm sure Steve's joking as well, but, you know, there is that mindset where, and I've had it too, where you feel like the market's out to get you, and really it's not. It is a hurdle, and like I said, I've been there. I understand. I think we're going to see a bigger move to the short side here. So, you know, we've got this kind of drawn out number 2 signal developing right there. It just printed again. Yes, sorry, I have a lot of comments here about the mic problem. It's a software problem every once in a while. It kicks me out. The mic does. So thanks for everybody for your comments about the audio. A little bit of an early reaction here before the hard edge. I'm really putting all my eggs in the seller's basket this morning. trying to head lower still. Like I said, the initial target is going to be here, the hard edge, essentially the low of the day, the morning. I'm shooting here for the median line. That's going to be my target, if I can get it, of course. Boy, the markets are slow, though. Hey, way to go, Mark. Mark's had a nice little divergence set up at 68.38 and a quarter, matched up with the counter trend signals on the Falcon, made $405 for his first trade. Nicely done. Good job. And there's not much to talk about here this morning. Like I say, the market's trading in slow motion. Probably going to see a little bit of a reaction here as we get closer to the hard edge, which is one reason why I've been really trying to hold off rolling my stops until we get down below the low of the morning. The Falcon had a late filter entry signal, hot on the heels of the trend change signal. Had an early trend change signal as well, up here at the 60.34 area. And then the hawk, of course, with the first micro-macro cross also in this zone here. All right, so now we're into the hard edge. We're into the lows of the morning. There's that reaction I was anticipating. Okay, so we've technically hit our high probability profit objective here when the market tagged the hard edge of the trading band. Actually, in hindsight, I should have shorted 2 contracts. It would have enabled me to take profit here at the band. That wasn't very smart. Hey, way to go, Mark. Mark also capitalizing on the late filter entry signal. Nicely done. So that's this one right here. Late filter entry on your Falcon, of course. Filter goes out of sync, comes back into sync. The trend line itself never changes color. Mark says, picked up another 250. He says, I might be 2 for 2 and done on the day. Nothing wrong with that. Nothing like just taking a couple of trades and meeting your objective. Come on, where'd the sellers go? All right, come on. If we can get a close below here, I think I'll start to roll my stops a little bit. I've been trying to be very patient, really trying to avoid a premature stop out here this morning. If this is truly developing now into a downtrend, uh, it's to be anticipated that there's going to be a little bit of a bullish rally here, at which time the sellers will try to knock the market down again. If you spent any time at all watching the markets, you know that they very rarely make a straight line to their target, which I know is very unfortunate. It would be so much easier if the market just went straight down, hit our profit target, and then we could say, okay, thank you very much. I'm going to go do something else now. Come on. I'm thinking this is just a, well, so far it's a weak buying attempt. However, if this follows through, this will produce a number 3 signal. That's going to be the hard edge bounce, or actually, I guess it's a premature hard edge bounce because the cloud is already starting to twist a little bit. Come on. Just looking for one more push here through the lows so I can do something with my stops. Well, at least they're not rallying. That's a good thing. Good question here from Floyd. Floyd's asking about the Day Ranger. The Day Ranger is one of these add-on tools. I just happen to have it on my Hawk, but you can put it on any chart you want or on all your charts, really. The information will be the same, so I just put it on the one. But Floyd asks, how would you interpret the Day Ranger today? 152 versus 161.5 from the other day average, from, or sorry, 161 from the 5-day average. Mine's actually a little bit lower, but that doesn't really matter. Does this mean that we are near the limit of volatility for the day? Yes, some people use the Day Ranger in that respect. You see what the Day Ranger does is it's tracking the average daily range. So today, our range is already 152 ticks. Yesterday was 144. The 5-day average I have at 135, the 10-day average 165, and the 30-day average 171. What I tend to do is I kind of look more for trends. So I'll look at the 30, the 10, and the 5-day average, and you can see that it's falling. Right, 30 days ago the average was 170, then it dropped 165, and now we're down to 135. So that tells me the market range is contracting. Things are starting to spend a little bit more time moving sideways. Today's range is actually expanding a little bit. We're already past yesterday's range, but as far as the averages go, yeah, we're kind of topping out, aren't we? We're 152, the 10-day average around 165. Given how the market has been moving over the last couple of weeks, we are kind of at our limit. But like I say, I look at it a little bit more from the point of view, I try to see whether the market is expanding or contracting. If the market is contracting, I normally take profit on target. If the market is expanding, I'll usually try to run out a profit objective. Today, of course, being the exception. I'm swinging for the fences today, trying to get a little bit more out of this trade. Another way that you can use the Trade Manager is to help you with your profit targets and your stop losses. So again, for example, we're looking at the range is contracting a little bit. Let's say just for an average, you're going to say, all right, I'm going to assume the average range today is going to be 150 ticks, just based on it contracting 170, 165, 135. So you pull a number and you say, okay, to me that averages out to be about 150. Well, how can you use that as a profit objective? Well, you can say, let's say I want to capture 30% of the daily range as a profit target. So that means that you would have a 50 tick target. Let's say you wanted to have 15% of the daily range as a stop loss. So if you're thinking the daily range is going to be around 150, you could run a 22 or 23 tick stop loss. That's another way that you can do it. Scott's asking, why is some of the text white and some of the text red? The white text means that it has exceeded yesterday's range. So yesterday's range 144 ticks, today's range 152. The 135, the 5-day average, is below the 165 10-day average. So the red text means it's lower. The white text means it's higher. Yeah. Steve says, you can also use the Steven meter. Once I place the trade, the range contracts. Did you sell, Steve? Is that why the market's moving so slowly? So we're getting a little bit of a reaction now off of the hard edge, and I've been really as patient as I can be with this trade, really giving the sellers every opportunity to get in there and fill that gap. Might take them a while. And as the day goes on, if we don't get another run down through the low, I'm probably going to have to adjust my profit objective. So I'm anticipating the sellers are going to show up here again. Trend changes take a while. You'll always see a trend change kind of drawn out. They'd better show up soon, though, if they're serious about pushing the market down here. Oops. My internet dropped there for a second, or my data feed. Don't tell me I'm going to have trouble with my data feed again. Just watching and waiting. Here we go. The seller's trying to knock the market down again. Could be one more bounce. The buyers could push it one more time before the sellers get all over them and really try to move it lower. Yeah, like Paul says, looks like a squeeze. It could be. Volume again is just so light. You can tell. Now, you don't even need to check volume figures, but you can just tell by how slow the market is moving. You know, there was 395 on that bar, only 1800 on this bar, 1600 there. Okay, well, this area through here getting some volume to it, but for the most part, there's nobody trading. Mark says, I had trouble for 2 days with my internet cutting in and out. Finally got the repair guy out yesterday, and he found 2 bad connections outside my home. Today I'm back up and going. It's really scary when you have your internet go out in the middle of a trade. Glad it's over. Which brings up a good point. You should always have a contingency plan for your trades, and don't just fluff this off. This is something you need to do. It'll take you all of 20 minutes to do. Program your broker's phone number into your telephone. Write it down somewhere. I even know one guy who has an analog phone instead of an electronic phone or a cell phone, just so that if everything happens, he can still plug his phone into the wall and call his broker. Make sure you have the number to the order desk, as well as if you have a broker that's assigned to your account, someone that you can talk to. And you can always ask them too, like, how do I get a hold of you if something happens on my end, if my computer crashes, if I lose power? You know, what do I do? How do I get a hold of you? How do I flatten my position? Hey, way to go, Floyd. Floyd says, second move on crude. I'm up 640 on 2 contracts. Nicely done, Floyd. Well done. Good job, guys. Love reading that. Love hearing about your trades. And you know, even the bad trades. If somebody took a trade and it didn't work out, and you're wondering why the heck did that not work out, you can ask me. I'll do my best to answer. You don't need to worry about being embarrassed. Nobody knows who you are. Well, unless you have friends in the room, then you can tell me to use an alias, and I'll call you something else. Yeah, Mark says, I've always had the number to the trade desk on a sticky note on one of my monitors. It's important because computers fail, power fails, internet connections fail. You have to have a way to get a hold of somebody so that you can look after your account. come on. Almost. Well, what do we think? At the very least, I should probably take this trade to break even. And, you know, there's 200 bucks sitting there, just waiting to be picked up. Oh, come on. They're so close. Yeah, once again, I should have actually taken two contracts. It's murder trying to manage a single contract on a trade. As you can see, there's always this, should I take profit, should I try to run it out decision. It's so much easier if your account affords you the opportunity to take multiple contracts. There's another bounce. Not real happy with that. I may end up bringing my stops in here really quick if the market doesn't turn lower again. Doggone it. They keep trying to head lower, and we keep getting these little bounces higher. So we're back up now to this resistance line. I know it's a little bit difficult to see. Back here at the 60.26.5 area. And I think that's all I'm going to give them. So I'm going to roll my stop just above there. May as well protect some profit. If we see a reversal here at this point, the sellers have come down twice now to this level and bounced. If the buyers can't, or pardon me, if the sellers can't get their act together and push the market any lower, I may as well take what profit they have. Come on. Sometimes begging helps. Please, please go lower. No! Get away from there. Okay, well, it was, at least it wasn't a total loss. I would have done a little better with multiple contracts or taking profit on the retest of the low here. Oh well. Yeah, Floyd says crude's still running. Yeah, crude's making a big move up. Huge move for crude oil. Yeah. Mark says, shoulda, woulda, coulda on taking profit when you had it. Yes, trading the left side of the chart is so much easier than trading the right side of the chart. Oh, I know you're just poking fun, Mark. Scott, I'm not entirely sure what you're after. Scott's asking, is there any way to look at your trade entries on Raptor? Do you mean after the fact? What you can do is you can go here to your data series, and you can go down to the bottom here, and where it says plot executions, you can go to text and marker, and it will show you where you enter and where you got stopped out. Personally, I find that a little distracting, which is why I have set mine to do not plot. Well, it was a decent move. I was still think I could have got down here to the primary resistance, but they were not ready for me yet. Oh, I see. Scott says doing my journal. Yeah, it would be helpful for doing your journal for sure. You can also see your executions on your control center, although sometimes this can get a little bit confusing. So you have your sell order. So you were executed. No, that's not right. There it is. Filled at 60.32 quarter. And then bought it back at 6006 quarter. Not quite sure why it gave me that. Yeah, use the text and marker. It's a little bit easier to understand. All right, so we got a little bit of an uptick, a little bit more sideways trading, and of course the market grinding to a halt. We're going to get a, oh no, sorry, I thought we were going to get a green bar sell here. I'm tempted, you know, sometimes if you have a directional bias that seems to be working, you know, let's say you look at your daily chart, for instance, and you think, oh, the market has a bullish bias. I'll just take a look at buy signals. If that is your bias, you can buy a signal like this one, even though it doesn't correspond with anything. You can buy a signal like this one, even though it hasn't prompted you for your, you know, one of your traditional Raptor signals. That's kind of the way I'm leaning now. Is I have a bearish bias on the day. I think that I honestly think the market is topping out. So I would be very interested in taking any short signal that develops, even though it may not qualify as one of the high probability signals. You know, if I print a short signal, there it is. Let's see if it engages. If I have time, I'll set it up. Oops, no I don't. There it goes. So it just engaged. So I'll just set the signal, or I'll take the signal. Now I'll roll my stops, and I'll adjust my profit objective again. Even though this is technically not one of our high probabilities, it kind of falls in sync with my overall daily bias. And really, sometimes trading is just as simple as that. Your job as a trader is to try to decipher what the trend is and then do your best to stay with the trend. Sometimes we get the trend wrong, but you should never really be hopping from a long signal to a short signal to a long signal to a short signal. Those kinds of days don't usually happen. You're almost always going to have some sort of bias on the day. Now, don't get married to your bias. If you, this has happened to me, I can tell you from experience, I'll go into the market and I'll have a bullish bias and I'll look to buy and the signal fails. Well, rather than say, oh, well, maybe I was wrong, I'll buy again. Only to have the signal fail again. And you would think after 2 losses, a light bulb would go on, and you would say to yourself, all right, maybe I'm wrong today. Maybe I need to look at shorting the market, and I'll take a look at the next short signal that develops. Even if you don't take it, you can just see how it plays out. You can see, oh, all right, the short signal had some follow through. I hit my high probability profit objective. Maybe I'll take a look at selling the market short. But I can be a little thick sometimes, and unfortunately for me, on more than one occasion, I do get married to my opinion, and the market will beat me up for it. And rightly so. You know, I'm pretty much asking for it. Yeah, Prasant says, so true, Eric. That happens to me too. You need to try to stay open-minded, kind of step back a little bit, and certainly if you get smacked a couple of times, you should start to ask yourself whether you're on the right side of the trade equation or not. All right, we'll see if this short signal can develop into anything. I still think the gap is down here. This is why I'm looking at the median line. If you're wondering why in the world is he looking all the way down here to the median line as a profit objective, this would fill the morning gap. 60.05 half is approximately where the market left off yesterday. That's not how the gold line plots, by the way. If you think, oh, the gold line plots the previous day's close. No, that's just a coincidence today. But it would be very handy for filling out the gap. So here we are challenging the lows of the day, the lows of the morning, really looking for a bearish break this time. Come on. Here we go. Come on. This 60-20 area is going to be a number to remember. The market's spending a lot of time at this hurdle. All right, boys and girls, I think we're going to button up shop here for the morning. You see what my bias is. I'm hoping we're going to see the market head down here and fill this gap sometime through the morning. It may take the rest of the afternoon session to get there, but that's my objective. As I get closer to the primary resistance zone, I'll probably become a little bit more aggressive with my stops, depending how long it takes us to get down there. If it looks like we get a flurry of activity, then I may hold on, but if it's this slow, painful trickle down, then I'm probably going to bring my stops in and may even just take profit on target. While I think of it, and I will remind you again tomorrow, there will be no trading room on Monday. I'm going to be out of town on Monday. But once again, I will remind you tomorrow. And we'll talk to you then. Bye for now.